So again, good morning and thank you for joining us today. My name is Kurt Nola, Director of Member Relations here at Barnabas Foundation, and joining me is Jim Bakke, our Executive Director here at the Foundation. And for those of you that are donors of our member organizations that are with us today, we thank you for joining us. We hope the topic you'll find of interest. But just a brief background on Barnabas Foundation is we serve about 210 Christian ministries across the country by providing plan giving expertise. And one area of plan giving is life income agreements, which is our topic for today. During today's session, if you have a question, feel free to put it into the Q&A section there at the bottom of the Zoom screen. I would think that after the last couple of years of being in COVID that we all kind of learned how that tool works, but feel free to put it in the Q&A section, not the chat. The chat kind of gets lost, but the Q&A actually pops up here on our screen as we're going through the broadcast today. And today's session is going to be recorded. So if you have a family member or friend or someone that you think this might be beneficial to listen to, you'll be able to find this recording of today's broadcast at barnabasfoundation.com/interactive. It'll be posted in about 48 hours up on that website. But today's topic is life income agreements. And so, Jim, thanks for joining us today. Appreciate your expertise.
Good to have you.
And tell me about, and tell our audience really what are life income agreements all about?
Well, I love talking about this topic because it's such a unique opportunity for generous Christians who want to do more for ministry, but need to pay attention to their income, need to supplement their income and make sure their income remains at a certain level. And so this is a way where people can give, but continue to maintain the income off that asset. So it's really a win-win for them.
Excellent. So, how do these really work? I mean, we talk about these all the time and we share this. And the question we often get from donors is, how does this really work?
Well, it's pretty straightforward. And this is actually, these arrangements are set up by the IRS. So this is a structure that is part of our tax code. And so the way it works is the donor just makes a gift of property, whether it's cash, stock, real estate, or other assets, into a giving arrangement where they receive a charitable deduction for a portion of the value of what they've given. But in addition to that deduction, then they receive ongoing payments for life, or maybe a life of two people, a husband and wife, or for a period of years, depending on how it's structured. Then when that period of time, either the lifetimes of the donor or the period of years that they've set up is over, then whatever's left of that gift goes to the ministries that the donors selected.
Thus the win-win kind of situation that we talk about. So with that, so you kind of hinted a little bit at the benefits. Why would somebody want to do that? What are the benefits to them as a donor to doing this?
Well, there are three real benefits. One is this ability to, we call it the win-win, the ability to make a gift, but maintain income for life. And for people that need to maintain that income, it's really a great tool. The second area is that you can really eliminate some hassles of ownership of assets. And we'll talk about a couple of examples, but if you own some assets that are either costing you money or costing time, and you would like to sell them, but you've got a tax bill related, you can eliminate that hassle by putting it into a life income agreement. And then the third benefit is the tax benefits, and that's where you can avoid capital gain tax in some arrangements, the way you make the gift, and in others, you set it up and you can get tax-free income. So there are, there are tax benefits, there are just elimination of hassles, and then this ability to make a nice gift to ministry.
Fantastic. We've done this for years, right? We've been in this business for years. We've written hundreds of annuities and trusts over our lifetime and been able to experience a lot with donors over the years who have used these to their advantage to accomplish or have and successfully achieved some of these wins that we touched on. But give us some examples where this has worked really well and some recent examples we've had to share.
Yeah, there are three general areas where it really works best. The first one is for people that want to make a gift of some asset, but are going to need stable income. Maybe they need that fixed income part of their investment portfolio to remain, whether somebody has CDs or other fixed income assets. They can make a gift and that fixed income stays on forever. For example, a person could make a gift, and based on their age, maybe the payment would be 4.9 or 5.2, depending on age, and that gift will remain stable for the rest of their lives. The second option is for people that have unproductive assets that they'd like to turn into an income stream. Example would be vacation property, or a vacant lot, or some machinery they no longer need. And for example, we had one donor who bought a lot 35 years ago, fully expecting to build on it, and they just never built on it. 35 years later, it went from 30,000 to over 300,000 in value. And they were thinking, okay, I'm paying taxes on this. It's really unproductive. Should we sell it and pay the capital gains? Should we just give it away? But in this case, they felt like they'd like to increase their income. So they made the gift into one of these arrangements, and it took them from an expense to an income stream. And then for others, they might have an asset that actually is producing an income stream, but the hassles of ownership are just too high. So this is a classic example of somebody who has a rental property, and for years they've been renting it out to tenants. And in many cases, people actually do the management, do the repairs, and it works really well. It's a nice income stream. But at some point, the work related is just too much, and they want out, but they have a huge tax bill to get out of that property. So in one case, we had a donor couple that had been renting this for, I don't know, 20 years or so. And they had two goals. One is they wanted to get out of the work, but second is they wanted some cash to make some gifts to their children, but still needed some income stream. So in their case, they gave an undivided 60% interest in the property to one of these gift income arrangements. They maintained 40% of the property, or they kept 40% of the property. Together, we sold it. They received 40% of the proceeds. We received 60% of the proceeds. They avoided the gain on that 60%, and the charitable deduction on the 60% they gave wiped out the tax on the 40% that they kept. So in this case, it was excellent solution for them. They received some cash, they continued to get an income stream, and wiped out the tax they would have paid if they'd have sold the whole thing.
Great examples, Jim. I appreciate you sharing some of those. And we've got hundreds more examples of people we've done this with. And that Christian school teacher couple, I just remember what joy they kind of found in when they funded that trust, because it had been such a huge hassle for them. And they were at advanced age at that point, because they were in their late 80s at that point. And the fear of selling it and paying that capital gains tax was kind of holding them back. And when they found that they could do this, it helped release them of that fear and that obligation, and stabilize their income. It's a beautiful thing.
Yeah.
Just a reminder to those watching, if anybody does have any questions, feel free to type them into the Q&A section. We'll address them as they come up. But Jim, how does someone listening today, so we've got donors and members listening today, and so some of our donors might be thinking, I've got something here. How do they know what the right tool is? Because we have different tools in this toolbox of life income credits, right?
In fact, there's an endless array of ways that this can be structured. And this is one of those circumstances where we don't recommend do it yourself. What we love here at Barnabas Foundation, all of our planners get to do this, is we can assist supporters of our ministries in structuring this gift in a way that's going to be best for you, best for the ministries you want to support, and most tax efficiently. So we sit down with people. What we love to do is just sit down with people and talk about, here are, look at what are the assets that you have, what are the tax ramifications if you were to sell, or what are the hassles if you continue to own, and then what would be the right arrangement to set up to meet your goals and to accomplish your charitable interests. And in some cases, we use a tool called a charitable gift annuity, and in other cases, we use a tool called a charitable remainder trust, and some variation on those instruments. And it all depends on how much income would you like from that asset. Is it an appreciated asset, or is it cash that you're planning to give? And based on all of your goals and your asset, then we'll talk about what would be the best approach. We don't care what approach you want to use. All we want to do is help put you in the right instrument to accomplish your goals and to further the kingdom at the greatest level we can. Now, I think we talked about earlier that after your lifetime or after this period of years that you set this up, the money that you have given, whatever's left of that, will go to ministry. And the other thing that we love doing with people is talking about what kind of ministries do you want to support. Some people have selected one ministry that they want to support, and all of it goes to that ministry. Others might select 3, 5, even up to 10 ministries. And so it doesn't matter whether you have selected a specific ministry you want to support or you have multiple. We can assist with those kinds of gifts.
Thank you, Jim. And just to reemphasize one key point on that, for those of you watching this recording today, or perhaps the recording later on, if you're a supporter of any one of our member ministries, this expertise of Jim and the rest of our team is here available to you free of charge at no cost or obligation, and completely confidential. So our ministry is to be that expertise, to be available to you, to help you plan through these types of things and think about what's the best way to divest those assets that you've been entrusted with during your lifetime, and to help you find a God-honoring plan that provides for those that you need to provide for, as well as all those favorite ministries that you want to do so. And life income agreements sometimes are one of the best ways to get that done.
Yes, and if you're listening and you're watching today and you have an interest in this, we'd be happy to have an initial conversation with you to see if this makes sense at all. And if it does, we can go into a full planning session where we at a confidential basis walk through your assets, your goals, the different options that you have. And if it works, we're happy to help you implement it. And if it doesn't make sense for you, we're also happy to say this probably isn't the right tool for you. Mm-hmm. So feel free. We have a team of 7 planners that would love to sit down and visit with you and help you decide what would be best.
Excellent. One side note of something that's of interest for our members, as well as for some of our donors who are experienced with CGAs, is we will have a rate change coming up here on July 1. We follow the American Council on Gift Annuities rates recommendations, and given the fact that interest rates have moved quite a bit in the last 6 months, they recently announced a rate increase beginning July 1st. And so we will be incorporating that, as most charities do. And so if this is something of interest, again, if you're a CGA holder or would like to do another CGA and rate increase is of interest to you, feel free to reach out to us or to any of the member organizations that you talk to that promotes charitable gift annuities. And for our members, just as a note on that, we will have marketing materials coming out on this rate change coming up here shortly, coming out in our next release of materials that you'll be looking for, I think on the first week of June.
And if you're listening, if you're watching this and have no idea what we're talking about, let me just say that this is one of the giving arrangements that people can set up, charitable gift annuity. And these have fixed rates based on the American Council on Gift Annuities. And if that's the right tool for you, we'll explain how this works more. If it turns out to not be the right tool for you, we're not trying to sell a specific arrangement, but if this turns out to be the right tool, we'd be happy to help you. Yeah. For those of you who know about them, yes, July 1, there will be a rate increase on all new charitable gift annuities.
So Jay, thank you for your question. In regards to RMDs being funded into what we call, these are classified as split into interest arrangements, or life income gifts as we call them. Unfortunately, no, you can't direct your RMD into a gift annuity or CRT or something like that to eliminate it from your income. You still have to take the income on your tax return, and then you would make a gift in and you would get a partial tax deduction against that.
So what's interesting about that is all of these are driven by the Internal Revenue Code. And there's been a lot of lobbying on Capitol Hill to try to get this allowed. Mm-hmm. And there is a bill that's been rolling around Washington to allow for IRA gifts, the RMD, to go into a life income agreement. It is not passed yet. We're not super optimistic about it being passed, but it is being discussed, and there in certain circles there is some work being done on it. And if if it passes, you can be assured we'll let you know immediately.
Absolutely. Absolutely, we will. And Marion, thank you for your kind comment, where it's a pleasure to be of service to you and your wife, and just to be assistance with you and in your planning as well. So just again, if anybody has interest in anything we talked about today, or broader planning, quite honestly, related to their gift planning or estate planning, you can reach us at planning@barnabasfoundation.com, or you can call our 800 number, which is 888-348. I'm drawing a blank on our 800 number. Oh, it's right there on the screen. It's 888-448-3040. Thank you, Kim, for pointing that out. Minor brain miss there. Also, for those of you who attended today, keep a watch out for a short survey. We love your feedback, and any feedback you have on today's broadcast or any other Zoom session that we've done. We're always interested in hearing what your feedback is on the content we're providing, any content you'd like to see us cover in a future session, and so forth. So be watchful for that short survey, and we appreciate your participation in that. Jim, thanks for joining us today. Appreciate your participation. Welcome. And everyone, have a blessed day, and we look forward to seeing you next time. Take care. Bye-bye.